Hello, this is Sahura, and we are at the last trading hours of 2025. I mean, officially, it's not a last trading hours. We will have some more trading hours later on Friday and Monday, but still, it's not officially. But I mean, but in practical, it's the last trading hours, and after today, so many of traders they will leave the market and they will be waiting or they will wait for next year for 2026. Merry Christmas, guys, and Happy New Year in advance. We're gonna have to like a few more days, but most probably we will not have any other video before New Year. So we will see you next time. We will see you in the videos. It's gonna be 2026 already. So the last week, I just want to conclude the week, this week, and generally what happened so far in the market and how we are going to leave this year. The week started with this Chinese central bank monetary policy meeting where the PBOC left the rates unchanged at 3 and 3.5% for 1 and 5 years loan prime rate as market was expecting. At the beginning of the year and in the last month, several times we talked that the Chinese most or biggest challenge, economic challenge, is not the tariffs, is not the trade war, it's the domestic demand. And we saw that the inflation, imports numbers, inflation on retail sales, all of them, they showed that that's the main challenge of the Chinese economy. However, why the central bank? The question is right now why the central bank did nothing in its last meeting because it sounds like the Chinese economy can reach its almost 5% economic growth as it was. I mean, they were expecting. That's why the PBOC and the government decided to do nothing for this year, but for the next year, for sure, PBOC and the government with any monetary and financial, I mean, with any policies. It can be some policies and decision by the central bank or the government's decision, whatever it happens, financial decision or monetary policies, they have to do something for Chinese economy and to boost the demand. Because with this demand, as we saw in like last week, we saw that the Chinese export improved by almost, if I don't mistake, 5.6%. But the imports it was less than 2%. That shows that the Chinese demand is very, very low. Same problem we have in Eurozone as well, same problem we have in China, in Japan as well. And that's the reason that these economies should do something and should manage something. That's why we saw that the European economies, for example, low, around 2.1 and 2.2% for headline and 2.4% for the core consumer inflation. But all this, we cannot put all the, I mean, they say that, okay, we give all this, all the point to the European Central Bank, to the ECB, that, wow, they did very good job to bring the inflation down. No, I mean, yeah, they did good job. They worked good. But the main reason of the lower inflation in Europe is the lower demand, the consumer demand, the weak demand, the weaker power purchasing. Okay, then we had GDP numbers from the Britain, United Kingdom, and we saw that the UK economy improved only 0.1% in the third quarter. Annually, it increased only 1.3%. The UK economy is moving low, very low, and most probably we will see another rate cut after last week's rate cut by 25 basis points. We should see another rate cut in UK as the inflation concerns also slowing down in UK. So the BOE or Bank of England will have nothing to do but to cut the rates by another 25 basis points to boot this economy which is moving really low. We can see this weakness not just in the GDP numbers. We could see this weakness in manufacturing numbers as well, in the manufacturing PMIs and industrial PMIs as well, and even in non-manufacturing PMIs. Generally, it was weaker than what it's supposed to be. Maybe better in some cases, it was better than like expectations in economic calendar, but in reality, it was weaker than it's supposed to be. Mexico economic activities improved, while in Canada, inflation, the producer price index or the producer inflation slightly eased, and that can support the Canadian central bank as well to continue its rate cut after 1 pound that we had in December, most probably in January. BOC also can cut the rates by 25 basis point to support this weakening economy. Australian Reserve Bank of Australian minutes, the meeting minutes, showed that the policymakers in Australia, they are a little bit worried about the inflation, and some of them they're even talking about the opportunity of the possibility of rate hike even. Maybe they hike their rates for next year. So that's why we should see some activities there, and most probably the Australian Central Bank or Reserve Bank of Australia to do some activities there to make something changes in the policies. Anyway, they are really worried about the future of interest rates in Australia. If the future of inflation in Australia, that's what you're talking about. They may be even the hiking to hike the rates, the possibility that they don't talk that we should do, but they say that even if the inflation goes in this way, we have to hike the rates again. Again, yesterday, the most important data that we had, it was about the US economy, where we saw the GDP. It was surprising by increasing 4.3% in the third quarter. 4.3% in the third quarter GDP in the United States was really the main surprise of yesterday, while the initial jobless claims also only 214,000 gave another the dollar surprise to the markets, and 216,000 just only for 4 weeks average. That's all these numbers shows that the U.S. labor market is still strong and resilient and can go forward with these strong and resilient data. At the same time, we had a GDP price index at 3.7%, shows that the inflation should be worried, should be concerned. We have to take care about these inflation numbers. And if the latest data shows that the inflation is lowering down, we shouldn't forget that some of these period that we talked about the inflation in the last weeks and this week and last week, they were for the periods that we had no data because of the government shutdown. That's why the inflation numbers and data that we're gonna have in January will be much more important. We cannot trust much on the latest published inflation numbers. However, we should see here the third quarter core PC price index or PC price index at 2.9 and 2.8% shows that it's not down. It's down, but it's not as much as supposed to be, and we should still be worried about the inflation. That's why the rates caught in January, even the market is still again counting on that, should not be too much looked at that so like positively about the rates cut in January. Redbook retail sales weekly, which is publishing weekly but measured it annually, increased by 7.2% last week. That's amazing number. Shows that the American, despite lower trust in the economy, which we saw in the CB consumer confidence falling towards 91.1, was like to 89.1 from lower than 91.7 expectations, down to 89.1. Even thought that the US consumers, they have less confidence in the market, but still they are spending money. On the other hand, industrial production and manufacturing production numbers, they were weaker than expected. They were low down, and that shows that the US economy is mostly moving by service sector and non-manufacturing sector, and this service sector is the main market mover in the US economy, and we should a little bit more interested and more talking about that, because we should be more careful about that and focus on that, because with these inflation numbers at the same time, we shouldn't forget that the inflation also the main inflation driver is the non-manufacturing or the service sector. So it's a little bit complicated topic. topic about the economy, we should talk about like for especially for the people for the follow fellows that they're more interested in the economy. You should watch that more carefully and more deeply. Yeah, that was the most important data of the yesterday and today. So far, we had a large economic activities index in Japan, which is increased by under or leading index, sorry, which increased to 109.8 from previous 108.6, but still less than expected. But still, the Japanese economy shows also moving much better than Europeans. While MBA mortgage rates, 30 years mortgage rate shows slowing down from 6.38 to 6.31, but at the same while the rates slower down, application couldn't increase, and applications for mortgage also fell by 5%. That shows that these rates are high, and still the market is still counting for now. At least what we can see here, they're counting on a lower rate, but it's a little bit complicated, because in the last 2 days we saw that the 5 years and 2 years bond yields increased, which means that in a longer time the consumer in the market actually is still expecting a little bit higher rates. That's why accepting it rates around the 6% for 30 years mortgage, I think it's supposed to be, interested, but the consumer didn't see that as an interesting number. So that's why the applications fell, and generally movement and generally activities in the mortgage market was lower than expected. Unemployment rate in Mexico stayed unchanged at slightly increased to 2.7% from previous 2.6%, but we can say unchanged because the changes was not so high. About the labor market in the United States, we talked already, and yeah. API weekly reports also showed that the U.S. inventories for the oil increased by 2,400,000 barrels last week, but it didn't. Market somehow ignored that. Why the market ignored? Because of geopolitical tensions, the market ignored the lower inventory. The higher inventories, because usually the higher inventories put the pressure on the prices. Looking at the charts, we can see that the market risk is still high with the VIX under 17, but like 16.18. If you remember, in a weekly outlook, we talked about the VIX and our expectations between 16 and 17. I told that I don't expect to see the higher risk these days, but I don't want to see the lower. I can expect the lower rates as well. Not higher risk, not because of that there is no risk, mostly because there is because of the lack of news and activities in the market. New Year Eve and New Year holidays. That's why we will have lack of activities. That can increase a little bit noises around, and that can slow the noises and voices around, and can slow down the risk in the market as well. But it doesn't mean that they are solved. That's why we cannot expect the low rate of the risk as well. However, the slightly easing the risk supported the pressure on the US dollar index to slightly down to 97.40 earlier today, but I don't expect the dollar index, because of the more demand for the cash, to slow down more. I'd expect the dollar index to get back towards 98 and end this year around 98, a little bit higher or a little bit lower, but around 98 will be more acceptable price for dollar index. While for the gold, after printing all-time high, new record high, about $4,520. The gold is slightly have some correction, but even if we see the gold price around 4,400, even $80 down from here, which is less likely to go there. But even that, we can say that the gold was amazing, had an amazing year with almost 70% gain, while the silver had more than 150% gain and was much better than improved much better than gold. In energy market, the WTI or oil price, with the increasing tensions between the Russian and Ukrainian, with the attacking against each other to, the Ukrainian, the attack to the Russian oil tanker on in the Black Sea, and generally the attacking of this, increasing the tensions between these two countries, lowered the demand, lowered the expectations for the ceasefire. So again, these higher tensions increase the oil price, but demand global. At the same time, we shouldn't also forget about the U.S. GDP. The U.S. GDP, positive GDP, also supported the energy market as well with the more expected demand. Anyhow, the oil price around $58.60 right now. We expect to see the price at around these levels by year end. The stock market is S&P 500 trading at 6,918, while 920 some was the highest level for this price for this index. Really, at the beginning of the year, no one could expect these levels for the S&P 500, especially after starting the tariffs and the trade war. These numbers were so less than expected market expectations, but still, market can see these levels and the numbers here, and surprised with the data that we have. Anyhow, for now, we expect to see these levels to be in. I mean, the market to end the year in these levels, while for the Nasdaq 25,000 between almost $26,000, we can say is the year-end price, and for Dow Jones 48 about 48,000, like 48,500, 48,600 can be the level that we can end the year. About the cryptocurrency market, after liquidities, the huge liquidities that we had in October, the market still cannot trust. The crypto traders, investors cannot trust much on the cryptocurrency market. That's why we can see the price is still under pressure despite 2017 December. We cannot see any rally, Santa rally here, and most probably we will end the year under $90,000 for the Bitcoin. For now, the market is not so much positive about the further movements as well. That's the market condition at the last trading hours of the year. Hope it was useful for you. The next time we will talk, it's going to be 2026. And hope, again, Merry Christmas and Happy New Year in advance. Talk to you in 2026. Bye.